Hi everyone. Today is December 11th and it is a Wednesday, and this is the Moneyball Morning Report for the Benzinga Pro platform. Today we'll start with SPY and the Qs, and then we'll go into the futures. What we are seeing is a very quiet pre-market. Remember, if you trade equities that have a lot of volume, particularly the ETFs, you want to measure the 8 a.m. to 9 a.m. Eastern Time candlestick formation. Watch for the break of those highs or lows that give you directional motion in the market. All right, so that's the small reminder there. We've got very, very sideways action. We are at the bottom of value area low. I do expect traders to try to put in yeoman's effort there, lifting price action off of this edge, and we can see that it does. But although the big picture is buy the dip, we've broken this channel and now we are retracing the edges. And so baseline, as long as we hold that 602-ish area, price action should be okay for buying the dip. If it breaks that zone, there's a liquidity event down at the big fat round number of 600. My estimation is that that's where we're headed. This big breakaway formation that began somewhere around December the 1st is actually being retraced. If we want to draw Fibonacci on the wave, it's kind of hard to pick which one you want to measure out since there are so many here. It might be better to choose something like perhaps a 4-hour formation to see if we can get the wave action. And you can see the wave action is very far, so we're going to choose this wave way to the left. I'm going to measure it out, and yeah, 100% retracement is certainly what I expect. Old resistance becomes new support. As it begins to bounce, we can draw those boxes and then measure future motion. For today, upside pressure looks like it could rise into yesterday's VWAP, day before yesterday's VWAP close at 605.50. But there's a fair bit of resistance there, so you want to be careful if you're trying to buy a breakout. That could get a little sticky, especially with this congestion zone that we saw back on December the 9th. Here we are with the Qs. Let's have a look at it. Also, channel break in the middle of the value area. And so we're looking at, the point of control. The VWAP is a fair bit below that for this range that we're staring down. And so we could see something fall into this low volume node. Where is the area that we need to keep supported? That's yesterday's low. If we break yesterday's low, I expect they will try to recover it, but in this sort of formation, the bounces are still sell zones intraday. We do see a little bit of a lift here. There is a little technical divergence, but trend is master and commander, and it is telling us there is downside pressure on the bounces, particularly into 522 and 523. If it breaks forward, 524, then top of the value area, 526. If it breaks down, we expect a reflexive bounce, just like this, buying tail. But if it fails to hold higher, we have to wait for an opportunity that shows us flattening, failing to hold higher, and then bouncing into resistance. We can take that long, but remember, when trend is down and we bounce, we're headed into the prior area of resistance. And so that's what we're staring down. Let's take a look at the ES. Whoops. Correct nomenclature there. All right, we are below value area low here, but being very quiet into the release of the CPI. And that box we can use, right? It's old support. The wick down here is fairly important. And so that wick at 60.40 still gives us a buying tail, but we're holding steady and we've got cross currents. We have upside momentum, we have downside trend, and we have a flattening consolidation event. Now, some folks will say, hey, that sideways action tells us that we are likely to continue in the direction of trend. my thought is if it breaks to the north, we are going to see some sellers try to push back. So we really want to hold this zone, a break to the north above 60.56, a pullback that holds the VWAP, and then a continuation. The rhythm doesn't look quite lovely as it sits right now, but if momentum continues and we hold the low at 60.40-ish, we could have ourselves a pretty nice bounce. The CPI is probably going to give us some sort of wicking action. We can look to that. Levels below 60.30. Remember, we did rise under very shallow volume formations, and so we could be coming back into the lower areas of support near that 60.34, near that 60.40. Notice, old resistance breaks out, comes back, but doesn't dip down into more than maybe 20% of that prior box, and then it breaks out again. So watch for the dip buying formations to potentially help us. Here's the actual trend line that we're watching. It's broken through, right? If we look at the wicks here, it's broken through. Let's take that big wick and see what happens here. Let's move it so we have, nope, maybe this one. Hard. This one's hard, right? Hard to find a trend line that's going to break and tell us what's going on, but it's definitively making lower lows and lower highs, so you want to be careful. Bounces are usually sell zones in those formations. If we break higher, 60.71, 60.79, we break lower, that means below that 60.46 to 60.40, we head to 60.31, and there is very heavy congestion over here, and we are also in rollover, getting ready to move to March. March? Yeah, no. We're getting ready to move to the next contract, whenever that is. I don't know. Here we are. Heavy congestion. Very, very heavy congestion. The box, which is here, I suspect, is, let me double check. I like for these boxes to match. Old resistance, new support. That's all the way down at 226, but the framework is this tight action up here, and that is 429. So let's go back. Yep, I'm right around that zone. We are dancing around the VWAP and the point of control. There's going to be a lot of arguing here, right? Because this is a true, I want to say value area. It is. It's an area where everyone has said, all right, I'll buy here, but I won't buy up here. I'll sell here, but I won't sell down here. Okay? So everyone's holding tight. This is a little bit of a potential basing. Looks somewhat like this area. So as long as we hold the floor somewhere around 21,376, we should have a formation that dips and allows us to buy more. That being said, we are still making lower highs and lower lows. So the trend, which is Master and Commander, tells us that when we bounce, we are very likely to bounce into an area where sellers are waiting to release their inventory. Okay? Value area low, as I mentioned, 21,376. Next breakaway line in the sand is 21,318. And then this resistance break that really just shot off, I suspect this is where we're headed, and that's 269. All right? Could this be a head and shoulders? Yes. I don't want to meet them on the street, but you could look at it. It's an ugly head and shoulders pattern, and that means we measure the neckline to the top of the head. That is about 300 points, which takes us down into the 21,000 area. I don't really see anything, well, yeah, I do. 21,019. I don't know if we get there. We'll see. All right? Let's look at the YM. Okay. Wow. YM really did break, didn't it? All right? Triple, quadruple topping formation. Very messy, but clearly in the box, right? You look at the highs, they buy the lows, move it back to the highs, take it back to the lows. A break down here, but a very swift recovery. We have to remember that when we look at these things, we have to go, oh, what's the response at that price action? And many times it's our expectation of what might happen. And so here we go to the top here. Clearly nobody buying the top of this, so we shouldn't either. And then it comes down here. First group of them says, oh, they bought there, I'm going to buy here, but into a lower high. Continuing to see these lower high formations building in general. I don't have any idea why this thing isn't getting longer for me. There it goes. Still downside pressure, still lower highs and lower lows. Where is it going? That's a good question. Hard to say, but my expectation is that it comes back into these primary breakout areas, which are right about, oh, look, we're sitting right at these edges. Old resistance becomes support. It's support yesterday, and they're trying to do it today, but negative pressure. So the first fast bounces are going to run into sellers, and then they're going to pull back for a higher low. And if you want to take that long in this kind of formation, you can. The first thing I would do is wait for heavy congestion and consider the short and watch it come back into higher ranges. That being said, the double bottoming formation does give us an opportunity to go long, particularly at this 44,270 zone where we see prior resistance becoming support. Upper edges back into value area low, 44,630. Lower edges, 44,000, and then potentially 43,890. Let's take a look at micro Bitcoin. What? Okay. So rather than use pickup sticks, watching all of that nonsense, let's remove it. And what we can see is we've got ourselves a little bit of a mishmash here, right? There's a very big box of heavy congestion. It's trapped very well. Value area low, 94,600. That's where they bought yesterday and the day before. And now they're headed up where? I suspect it's value area high. That's right around 100,500. These guys are still in a little bit of a slog. We're coming into that 99,500 zone. And I suspect they're going to meet a fair bit of sellers there. That being said, if they meet sellers there, are they able to pull back and make a higher low? That higher low looks like the potential of 96,500, 96,600. Yesterday's VWAP close. That looks like a fair area. This momentum is very high, and it normally does suggest there's some selling pressure here. But when momentum gets high, doesn't mean price can't go higher. So be very careful using momentum to stage a trade. Let price action tell you what's going on. Upper levels 102 and then 105. Lower levels that 96.6, 94.5, and then here at 90,700. Let's take a look at oil. Big mishmash. A lot of unrest, particularly with Syria in its location. We've seen ourselves a pretty big bounce. We've got the EIA report today. You know, EIA can be a tricky thing to trade. My thought is this 69 area is going to be resistance. And so it's come into 69. We see a few selling tails, but momentum is still high. So we could have a breakaway into 70. The pullbacks are buy zones here in a very interesting wedge pattern. But don't get involved in the middle here unless you come into the VWAP and you've still got solid momentum. It is a buy the dip. The deeper dips will be a buy zone. Up here, we're going to run into the same problems that we had before. 70-30, top of the range, bottom of the range, 67. My thought is if we cannot hold this area near 67, easily we get to 66, but then there's going to be a cascade coming. I do not know the direction this chart will ultimately take. What I do suspect is that the move is going to be very dramatic. Look at the areas near value area low. They make tremendous buying opportunities once they break out and pull back and hold a higher low. Does that mean you have to wait on it? Yes, indeed it does. So wait for it. It'll come to you. Gold is already in roll. Sitting up at the top, look at my line. Isn't that lovely? Where are we? 2740 was my target zone here up at this edge. We talked about it earlier. It did hit it. And so now we've got ourselves a little bit of a topping issue. Could it mean that gold retraces? The line in the sand is going to be 2720, right? Somewhere around there. If it cannot hold this level, or it bounces and fails to get above 2740, it's going to give us selling pressure right back to the value area high, which is 2694. All right? Hey, good luck trading today, folks. I'll see you on the streams.